Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about AMC stock. So I hope you guys enjoy it. I hope you guys get something of value out of this video. If you do, hit that like button, subscribe, because at the end of the day, that really helps me out when you guys do that. So now, what is AMC? Now, AMC is a movie theater company. Over the past year in 2021, they've seen a lot of growth, a lot of volatility, and this was due to short squeezes. Now, short squeezes pretty much occur when people or hedge funds are shorting the stock, which is pretty much betting for the stock to go down. Now, when you short a stock, you pretty much borrow the shares and you pretty much hope to buy them back at a lower price. Now, the difference between shorting and buying a stock, when you buy a stock, if let's just say you buy a stock for $1, the worst that can happen is the stock goes to zero and you're out a single dollar. But imagine if you short a stock at $1 and it goes to $5. Now you're in the hole more than $1. If it goes to $10, $20. So the same thing was happening with AMC stock, right? People, if we actually look back, at this chart here, this is the 3-year chart. If we go to the 5-year chart, you can see this thing was just getting slammed down, right? Just had this nasty downward trend in price. Highs up here at about $33, and it would just sell off, and it hit lows as low as like $1.91. Now, during this time, people were actually buying up this stock because, one, it was extremely undervalued. Two, because they were trying to cause a short squeeze against hedge funds. And it worked, right? We had this first initial pop, went up to about $20, sold off, and then this thing just exploded. This is when everybody was buying AMC or GameStop, causing this thing to go parabolic, went from $11 all the way to $72. And ever since, it's just been selling off, right? It's been a crashing ship. And that's kind of expected, right? The reason why I say that is because anytime a stock pops up well over 500% in the matter of, a couple of days, you're going to see sell-off. The stock is not worth that much. You're going to see sell-off. And that's exactly what we've seen, right? We've seen a stock that was once trading for $1, hit 72, fall back down to 20, and it's still up. The craziest thing is it's still up right now, 700 and about 81%, which is absolutely insane, right? The year-to-date return on this thing, given all the ups and downs, is still well over 700%, which is absolutely crazy. And I know there are huge AMC apes out there that think this thing is going to pop back up to 72. And here's the thing. I definitely think it has that possibility. Realistically, is it going to happen again? Probably not. And I know a lot of people right now are going to the comment section and saying you have no idea what you're talking about. But the reason why we're seeing so much sell-off is because the stock is not worth it that much money. Right now, this company is worth $10 billion. And they were on the verge of bankruptcy before the lockdowns. So when the lockdowns happened, AMC had to take on billions of dollars of debt to get through that hardship. Now, they did do a couple of good things, right? AMC did do a couple of good things. When the stock popped up, AMC, the company as a whole, sold a ton of shares. Now, when they did this, they were able to pay back a lot of their long-term debt, which is fantastic. You love to see that. Not to mention, they did do a little bit of some board changes and stuff like that, very similar to GameStop. But if we actually look at this thing, this is not the greatest, right? So this is AMC. This is all of their kind of finances right here. So you can see right now, their total assets are about $11 billion, okay? The long-term debt is about $5.4 billion, which is, $5 billion is an awful lot of money compared when they only have about $1.6 billion in cash, okay? So they have $5 billion in debt. They have $1.6 billion in cash, which sounds like a lot of money, but given that long-term debt will kill a business. Any business, if you have too much long-term debt, it will kill your stock, your company, because one, those people that, those banks and all those people that offer that money are going to want to get paid. And that's kind of what we're starting to see is AMC's going to burn through that capital and not going to know what to do. Okay. So not to mention they have been doing decent on their revenue. If we actually look at their revenue here, you can see they were up about 538% on the quarter, which is very, very good. But here's the thing. This is coming out of an overall lockdown. And one thing I really think of, AMC carries a lot of short-term potential for sure, right? All of these ups and downs, but AMC in the next 5 to 10 years is going to be obsolete, right? The reason why I say that is because what is becoming stronger right now, I guess is the best way to put it, is these streaming services like Disney Plus, HBO, all of these other streaming services are now offering, stay-at-home movies for $20. When they offer that, they have extremely high margin because now they don't have to split that profit with AMC or, Imagine or whatever, movie theater company you go through. These companies aren't going to have to do that because one, you can stay at home. The only benefit is to go out, have a good time, get some popcorn. But for most people with kids, couples that just want to stay at home, order out, AMC is going to struggle. And I think for me, there is not enough reward out of it. It's too high of a risk for the reward. So for me, AMC stock is not a buy. I've been telling you guys a while to hop out of this. It's a sinking ship, and I know that's hard to say. I would love to see AMC carry a little bit of some potential. It could use that 200 moving average line as some overall support. It had that tendency in the past, and so we'll see what happens with it. Maybe for a short-term day trade, swing trade, there could be a little possibility, but too high of a risk for me to hop in. So guys, that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe, and we will see you later. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone.